everyone. My name is Aditi Kataria and today I will be presenting on the topic supply of services under reverse charge mechanism, commonly known as RCM. So let's get started. Introduction to RCM. Before we jump into categories, let me first explain what exactly is RCM. Normally in GST, the supplier of a service collects the tax from the customer and deposits to the government. Simple, right? But under reverse charge mechanism, this whole process is flipped. Here, the receiver of the service is responsible for paying the GST directly to the government and not the supplier. This is governed by Section 9, subsection 3 and Section 9, subsection 4 of the CGST Act 2017. Now, you might wonder, why does this rule even exist? Here are the three main reasons. First, many suppliers in India are unregistered. They are small workers, transporters, artists. They don't file GST return. Second, it widens the tax base. Sectors like transport, entertainment, events are now brought under the GST. Third, it prevents tax evasion. In sectors where suppliers are small or unorganized, it is difficult to track them. By making the buyer responsible, the government ensures tax is always collected. Key concepts and features. Mandatory registration. If you are receiving a service under RCM, you must register under GST even if your turnover is below 20 lakh limit. Input tax credit is after paying the GST under RCM, you can claim it back as ITC, but only if the service is used for the business purposes. Self invoicing. Since the supplier may be unregistered, the recipient has to create the invoice themselves. It acts as an official tax document. Notified categories. The government issues specific notification. The key one being notification number 13 2017. Payment in cash. This is very important. RCM tax must be paid in cash only through the electronic cash ledger. You cannot use your ITC balance to pay it. Many businesses make this mistake. Time of supply. The tax liability arises on the earliest of the date of payment or 60 days from the date of supplier's invoice. And overall flow is simple. Supplier provides the service, recipient pays the GST under RCM, recipient claims ITC later. Now, three categories that we are covering today. First, goods transport agency. A GTA is any person who transports goods by road and issues a consignment note. This consignment note is the key. It is basically a receipt saying, I have taken your goods for delivery. Without it, they are just a truck owner, not a GT. RCM applies only when a GTA provides service to a company, factory, LLP, society, or cooperative. The rates are 5% GST without ITC or 12% GST with ITC. The recipient decides which one applies. Importantly, a GTA can opt out for RCM by choosing forward charge, where they pay the GST themselves, artist or performing artist. This covers singers, musicians, dancers, actors, any individual artist performing for a business entity. Most artists are small earners. They are not registered under the GST. So instead of burdening them with compliance, the government makes the hiring businesses pay the GST under the RCA. The rate is 18% GST on the performance fee. There is a very important exception here. If the artist fees are 1,50,000 or less per event, there is no GST at all. Sponsorship. Sponsorship is when businesses give money to an event or a team in exchange for a brand promotion or visibility. Under RCM, when any body, corporate, or partnership firm receives sponsorship, the sponsor, the one giving the money, pays 18% GST. Many sponsorship recipients, like sports club or cultural organizations, are unregistered. So the government makes the sponsor, who is always a registered business, responsible for the GST. Now let's bring these concepts to the life with three simple real world examples. GTA example. Mr. Ramesh owns a transport business. He picks up the goods from the ABC Private Limited's warehouse and delivers them to the another city. He gives ABC a consignment note. which makes him a GTA. ABC pays 1 lakh as the freight charge. Since Ramesh is a GTA and ABC is a company, RCM applies. ABC pays 5% GST, that is rupees 5,000 directly to the government. Ramesh gets his full payment of 1 lakh rupees without touching GST at all. Sunita is a classical dancer. She is not registered under GST. XYZ Private Limited hires her for their annual day function and agrees to pay 2 lakh to her. Since the fees is more than 1.5 lakhs and the hirer is a company, RCM applies here as well. XYZ Private Limited pays 18% GST, that is rupees 36,000 directly to the government. Sunita gets her full payment of rupees 2 lakh with zero GST headache. Now let's see an example for sponsorship. Dream 11 sponsors Mumbai Indians for rupees 50 lakhs. Mumbai Indians is a body corporate, they are receiving the sponsorship. So RCM applies, Dream 11 pays 18% GST, that is rupees 9 lakh directly to the government. Mumbai Indians receives its full sponsorship amount without dealing with the GST at all. Now let's look at some of the advantages and disadvantages. Let's see the advantages first. It prevents tax evasion by making sure even transactions involving unregistered suppliers are taxed. It expands GST coverage to informal sectors. It ensures the government always receives the revenue from every transaction. And registered recipients can claim ITC on the tax they pay. Some of the disadvantages are as follows. The compliance burden shifts entirely to the recipient. Cash payment is mandatory. If a GTA switches between forward charge and reverse charge, the rules become complex and confusing. And if applied incorrectly, there is a risk of double taxation. To conclude, RCM is a smart mechanism and brings unregistered and informal service providers under the GST net without burdening them directly. The core takeaway is simple. In RCM, the bigger and stronger party pays. The transporter, the artist, the sports club, they receive their money. The registered business, on the other hand, handles the tax. Thank you.